Hello traders, Nick Shaheen here, looking over a few tickers out there, probably a couple of dozen if I can get away with it. This is my opinion on the charts. I'm not commenting on the companies themselves. I may make a few comments here and there, but no judgments. So keep the emotions on the side and try to be as objective as possible. I'll give you an example. So I'm not a fan of AMC. I've had a few squabbles in social media on it. So I did a video on it just yesterday. Today is 5/27. Just yesterday I said, when it was going into this, I said, in theory, this is shortable, but if they go above it, then you should chase it because it's going to 30 or above. Those were my comments on record before it happened. So it came into here, it dipped, and then it took it out and ran to what? Almost 30. So completely objective opinion like this works without needing to involve emotions. So disclosure, at the top today, I bought a few puts just to put some money at work and relieve the itch and not have to deal with it. It's just risk a buck a put and see if it happens or not. I'm okay with it either way. So in order to see to get some perspective on a chart like this where you don't see anything on the left, you have to expand time frames, and I bet you I would need to go to a monthly chart to really appreciate it. So now we're looking at 2014 on, and you can see where it stopped. Visually it looks like this is the tough part. So this was a big ledge here, whatever happened in 2017, and now it's going back into it. So if my mother hands me a pile of money and she says, put it in to work at AMC, and I'll say, why don't you wait out a few ticks because this is not an ideal entry point. I don't have enough faith to risk my mother's money on it. Therefore, it's a low conviction trade at best, right? From a trading perspective, you have to realize that these are not investments because the P&L on this one, unless they're going to reinvent the wheel completely, the current P&L, what is happening right now, does not justify this price action. Therefore, it's pure price action from the manipulation in social media. Whatever wave is taking, whatever mean, it's like a poker room these days. So moving on, Ford had reason to rally, news. I recommended long Ford last year, so I have a clear conscience there. This too is not an obvious point of entry just from the short-term perspective. However, this is not short because it's relatively cheap from a perspective because of bad management. This is a new management team. They're making the turnaround, so I'll give them the benefit of the doubt. If somebody says, I want to buy Ford for the long term, I couldn't call them out on it. But it's still technically not an obvious entry point. Same exact comments for GE. I too shared along on this one last year. Both of these trades were big winners, so I have a clear conscience on that one. This is a monthly chart, so GE long term is a disaster. However, the new management team fixed the company. Now it's 4 different segments, all healthy. So the P&L shrunk by design, and now it's leaner and meaner and it can build back up. Technically on the short term it could spike even more, so I am long via lotto ticket calls from a while back and I'm letting them work. It could get to 1650, but to start here, that's a prior fail point. It will need the rest of the market's help. So if tomorrow the market is up, it will probably trigger that and go finish its job. So from that perspective, it's a good trade. By the way, I don't remember saying that. We do all this work in a chat room all day, every day. We have Sunday meetings for free, like webinar style. 2 write-ups a day, all kinds of trade setups, iron condors, etc. And the link will be down in the description, so you can join. It's not free to be there. Clearly, I bust my ass for it, but it is free to try out. And the link will take you to PayPal with $0 for 10 days. You can cancel anytime. There'll be no harm done. The reason for PayPal is I just want to make sure real people are trying to get in there for good purposes. Also, subscribe to this YouTube channel if you're not there already. It's free, and push the bell thingy so you get the announcement. I may lock up the YouTube channel, depends on how much effort I want to put into it going forward. So make sure to subscribe. All right, so Ford, GE, same comments, okay. Apple, the king of stocks, arguably. Nothing new to do here. The smartest people are the people who sold iron condors on it. We chose to sell on Amazon. I shared the table for that. That played out fine, among other 8 or 9 iron condors that all won this week. 2 for Wednesday, and the rest for Friday, tomorrow expiration. So we do that every week. Let me see here. KO came up as one of the most actives. Like, what? Not for me. Okay, go get somebody else's money. It pays a dividend of 3%. So if that's what you're after, fine, but they're higher dividends somewhere else, like Exxon or Chevron, to name two. And those two companies, actually, management said, we will defend the dividend at all costs. These guys, I don't know if they have or not. I would go there first. It's not an obvious entry point. Nokia was one of the longs from last year. The folks on Reddit paid us big time. We went in for fundamental reasons. We got the pop for crazy reasons. I'll take it. I won't spit in their face. If it goes above these two fail points, do not short it. So this is where it's a fundamentally okay company that's been underappreciated, waiting for a bust out from 5G, and then you get the action from Reddit. Sweet. That is a good hold, in my opinion. Palantir, same comments to a degree. We're long into this. I'm still long via sold puts and put spreads. I have a couple of call spreads that were struggling a little bit, but I don't care. It's house money. Long term, this is a winner. I will buy the dip hard if markets crash. Anywhere below 20, I'm a buyer. Not all in, but a little bit at a time. It's a good company, good management, good future. If markets are higher, this one's higher. NEO, 3 EVs I like: Tesla, NEO, and XPEV. We're long. We were long SPEV. XPEV, I closed it too soon, but I left it. It was available for the members to enjoy. NEO, we were long on the dip and the rally a few times. I'm no longer long NEO because up here I decided that I hit my targets. Tesla, I sold put spreads on the dips. There's no obvious entry point here. So loitering time for me. Long term, these are the only 3 I would bet long term. Why? Because I have tangible measurements on the P&L. The rest is just bull crap waiting to happen. I don't bet on bull crap. If it happens, it happens. I'll bet it on when it's real. So SPCE, talk about bull crap. No, I was long on the dips several times, not recently, but there's no way I can chase it up here. Don't know why it's rallying. Don't care why it's rallying. If it wants to go to 60, it's going to have to do it without me, and I'll clap for it from the sideline. From a decision-making process, this is not the proper time to get long for an investor / trader. Now, for a poker player, maybe. I don't know. I don't play poker. All right. So let me see here. AAL. Solid trend. Not compelling entry point. Maybe another dip down to 21. I'll be more interested in buying it. Now, what makes sense with these guys, is that, weekly. I want to show you how realistic this stock is. So the world ended. They took this long to recover without a stint of craziness right there. They immediately priced it out and said, no, we were wrong. That was smart. That was to squeeze Warren Buffett out. Wasn't that it? So they came back to here, and now they're building a handle. So if they can break out from here, a coupling handle could get it up to here with a ton of resistance. Every little pokey thing here is going to be a selling point there, starting with this one, and this one. So logical recovery. I love it. If I'm long, I'm happy. If it dips, I buy the dip. How about that? And that goes probably for all the airlines, except LUV. It trades like a tech stock, if I remember correctly. So maybe special circumstances there. X, no way for me to get long here. So I was long last year. I sold puts at $9, and it crashed down to 4.8. I didn't lose a penny. In fact, I made a lot of money because whoever bought the puts from me mismanaged their trade. They never assigned me shares. They were July puts, and we were still in end of March. So they never gave me the shares. Can you believe it? I ended up making money on the trade. Give you perspective that I don't hate the company. I shorted it here, made money, and walked away. I have no compelling reason to buy it up here. It's going into a prior failure. This candle matters, I think. So we'll see what happens with X. It's also a dollar play because dollars are affecting commodities, and steel is one of the commodities priced in dollars. So be careful with that. Clover. So is it fake or is it Memorex? So it can't be fake. I'm a fan of Clover down here. I don't have a trade in it, but every time somebody asks me about it, I say, don't get long, don't get short. It's a real company. Don't believe the hype. One person's opinion and a write-up doesn't make it a fake company, especially when it's signing up states. So it was the right thing to do. Up here, it's running into technical difficulties because this is the point of control, so it might have a lot of suppliers of a supply of sellers up here. We'll see. Not an easy entry point here, but on the dips, I will repeat the process. I would sell puts and buy calls in it with confidence. Sell puts to own shares. AMD, I love the company. I don't love the way the stock looks right here. I want it to. I don't want it to. I'm waiting for it. If it loses the 2 weeks ago's low, it's coming below 65, and I'll pounce hard. I don't want it to go there. I'm okay not profiting anymore. I was long here, I was short here, and I'm waiting to get long. I don't have an entry point. GM, I probably won't say anything. Not an entry point for me. Not a short, but definitely not an entry point. TLRY, whoops. Oh my God. Okay, we got to zoom in for this one. All right, so this is where I think machines will try to sell it. The bottom was good to buy. I'm pretty sure I wrote an article about it. I can't remember. So, tough one. If I'm long, I'll enjoy it. Getting in here, I don't know. Shorter term, I would worry about this little cluster. So let's see what happens. Yeah, could go either way. I can't help you there. Sorry about that. CCL, I'm gonna. Oh no, wait. Yeah, NCLH, I'm gonna do instead of CCL. So NCLH triggered some sort of an alarm on my because it beat something like this, but it didn't have that, I don't think. So NCLH. Wait, we are on NCLH. Okay, so never mind. I had an alert and I didn't go chase it, so it must have been beating this one. Let me see here. Is it this one? Yep. So this alert went off today because it was. I need to move it, so I'll just move it up so I can look at it tomorrow. See? So I'm just punting. It's not an obvious entry because of that guy. If this was a clear beat, then I'd say, okay, maybe he's got a chance to go to 35. But what about this? Okay, this closed perfectly. Okay, so plug. Is this a real company? Does it have real P&L? Oh, very small, but at least it's a real company. So maybe long term it's a good play. I don't have a compelling reason to get long here. It does look like it's placing a bottom, so that's good. Maybe I should put it on my alerts. Next time it goes down, it is. It didn't trigger though. Oh, plug, caution. So if it loses this one, caution, but more likely than not, it's going to find support there. So on the next dip down here, so I'm going to put an add one right here. Start looking for longs, basically, and with a tight stop. So, and the breakout from here is chaseable. All right, so that's plug. Basically, it's just nothing to do right here, in my opinion. CLF, I may just skip. Yeah, I have nothing to say up here. I don't know much about it, so I don't want to steer anybody wrong. LI, I've commented twice or 3 times about it. I don't know auto, so it's an EV company. Okay, of source. Oh, maybe it's LiDAR. So it's going into a prior cluster of failures. Plus this candle here worries me. And look at this. Yeah, this is not an entry point. This is a hard line. That there are going to be big battles here. So if I'm long, I would take advantage of this and get out. That's me. I get out early and I'm okay seeing something running without me. If that's not you, don't listen to me. Rocket, I'm long already into today. I booked some profits today at the top. What does that mean? So I'm long a long-term call because fundamentally I believe in the company and I can't believe it can't find a floor. And it's this pop. I sold calls that expire tomorrow against my longs. So if it doesn't blow up tomorrow, those calls will die in my favor, leaving me long. The long calls I have, which are already green, a lot greener because I basically took some off the table without taking any off the table. If tomorrow it doesn't blow up. So if tomorrow it gets to here, I capped my profits. That's the worst that can happen. I'm still green, but I capped myself. So if that works, I'll repeat the process on the next spike next week. And the week after, and the week after, without going through earnings. So that's called a covered call, just like owning shares. If you own a call, you can do covered calls. Do homework. Don't take my word for it. Tesla, not an obvious entry point, not an obvious selling point. This was a place to catch it, and I did write up about it. And in fact, in the chat room, Frank, you can attest. Raise your hand. In the chat room, I had a discussion with one of the people in there, Frank, and he said he's looking for to get long something. I said, well, how about you sell puts in Tesla? And Frank sold puts in Tesla. The next day, he booked them because one little pop, puts disappear because on a bad day, the puts implied volatility would be huge, and then you sell to somebody panicking. And the puts he sold were at, if I remember correctly, $380 level. So down here. So the worst that could happen is him owning shares down here. So and keep the money he sold. And it was like almost $10 in premium. And then the next day, the premium almost disappeared. And by now, they probably disappeared. So I don't know. We'll see. That would be how I trade it. Down here, I would sell puts and put spreads into what other people are fearing. Listening to CNBC and do the opposite, that's probably a good gauge. If CNBC is covering, is this the end of the rally? Do the opposite. If they're saying, is this the end of Tesla? Sell put spreads in Tesla. And if you want, buy call spreads also. Then they'll be cheap, no out-of-pocket expense. All right. Wish I'm going to skip Mara. Mara went long. I haven't gone long since. On the dip here, I sold put spreads at the money and recommended the same and buying call spreads. I'm out of everything. I will set my next trade based on the price action. Next time it dips, I'll probably do the same for Mara. BYND, I don't remember if I said anything. This is definitely not an entry point. I want to say I discussed it. I just don't know what I said, so I won't say I said this or that. But at 150, not a touch for me. I don't know what the hell happened today. Is it the Krabby Patties come popular or something? SpongeBob. Those with kids know what I'm talking about. Airbnb. On the dip, I was a fan of Airbnb. On this pop in one day, I am not. So long term, it won't matter. But I'm worried about the whole market. So is this an obvious entry day? No. Yesterday was way better entry point, clearly. Here was a bit better entry point. So if it comes back to here, I would sell puts and put spreads. Up here, I mean, it doesn't make money yet as far as profitability. It's losing money, but it should have a good future. So I hate chasing up 10% days. What did it end up? Up 6%. It's just not me. It's not. I would rather let it go. LYFT, I offered a trade today, so I won't comment. RBLX, oh boy. So early March, I wrote up a trade on RBLX. Wait, hold on. Let me go get the date. All right, so it was early May. I did 2 trades in one day. I shared 2 trades, RBLX and Chewy, and they're both winners. So most often when I share a trade, I share 4 versions of it. Depends on how people want to go. I tend to like to sell stuff, which is usually these things, and some people like to buy stuff. So the RBLX trade on 5/6, the price was $65.66. Now it's $95 today, $97. It was a buy call, and it was $6. Now it's $32. So if you spent $600, now it's $3,200 on one contract. If somebody did the spread, which would be what I would do, I don't like to buy naked calls, $340 now is $910. If somebody sold a put naked, they made $2 out of thin air, $200 per contract. If somebody sold a put spread, they made $100 out of thin air. No money out of pocket for these two. I didn't even need a rally, and they both had a nice buffer from price. So these expire in mid-June, but I can buy them back now. I can sell these two or buy these back for pennies. All right, so the Chewy situation was kind of similar. So what I'm saying is the easy money is done for in RBLX. So the question came today, is it going to go higher? I said, I don't know, because you look left. There's no reference. So I don't know why it went to $100. I knew that it had potential and it was cheap. Long-term play, that was confidence for me to sell a put in it because I would own that stock. I mean, they're in the right place. They tailor the kids, I think, and anything that has to do with kids makes money because that keeps the kids happy and the parents are happy. They'll spend the money. So anyway, RBLX, not an easy entry point here, of course. Chewy, again, great company, long-term bet, works out great. This is an argument for selling versus buying. So here's Chewy. There was profits. Trust me, this 4.68 was higher at one point. So it's still profitable a little bit to have bought the naked call. It's still profitable to have bought the call spread. This is weird. But anyway, sold put created $100 out of thin air per contract. Sold put spread created $50 out of thin air for a sold contract. So nothing happened much, and you make money if you sell stuff, and you may not make money. You may or may not make money on buying stuff. In fact, usually stuff you buy loses. Didn't you hear? Most options expire worthless. That's why I favor selling them. It just doesn't make sense, right? So anyway, those are that's the feedback on Roblox. It's not an obvious entry point, people. I don't care how much you love it, and I loved it. I don't love it up here. It's just way too much for me. And the last one on the list, Fubo. So I was long Fubo. I got out. Why? Because I didn't buy calls on this batch. This is not the first time I'm long Fubo. And this batch, when it was falling, I sold put spreads at the money. And this rally gave me most of my profits pretty quickly. So it doesn't make sense to leave the risk open for pennies when there's so much time on the clock. So I bought them back and booked the profit. Now, long term, on paper, this is an aggregator of content just like YouTube service, right? I subscribe to YouTube. I would use them, but they're the same price as YouTube, and why would I want to choose another vendor? I'm already wrapped up in Google. I'll just stay with Google. Kind of like, why would you cancel Apple to go buy something that Apple gives you now from somebody else? It just doesn't make sense. There is no edge. If Fubo comes out with a new hook, like if you do this, we'll get you that, then I may consider it. Now, technically speaking, this was a turning point. Right? You can see it visually. So going into 27.28, it's not at 27.30. It's not ideal starting point from a trading perspective. My concern is not from Fubo all by itself, but from the whole market. Plus, it just rallied, what is that, 15%? Oh, Jesus, 25%. I'm just not one to chase it, even if it wants to go on its own. So a stock that can do this, you don't want to short. When I say it's not for me, that doesn't mean go out and short it. That's crazy. Look at the upside opportunity in this environment. I mean, when I said 30 yesterday, I got pushback on AMC. And look at it, in hours, to 30. So it's just crazy to argue with what's going on. Even though I don't like it, I don't argue with it. The way I argue with it is by finite risk. Like if somebody wants to short Fubo, and I don't know why they would be, this is not the situation where AMC that has no P&L right now. This one has a P&L. It's growing. It's delivering. It's going the right way. So it's the opposite situation of AMC. They are trying to establish themselves versus the other ones are trying to reinvent themselves in this new environment. Anyway, that's enough tickers, don't you think? I didn't count, but it's probably over 20. Talk to you later.